Welcome back. You're tuned in to Bazaar Morning Call. I hope you're having a good morning. Well, Deven Choksi, or MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good morning. Thanks so much for joining in. Well, plenty of stocks to discuss. Let's start with Coal India. That's been a rank outperformer, in this year so far out of nowhere. Plus, it's given a dividend of more than 15 rupees. Some brokerages are even working with 30 rupees for the year. That would mean another 15 rupees in the second half of the year. At around 330, 340 rupees, do you think bulk of the good news is in the price? Or do you think it still has to play out at this 6 to 7 times PE multiple?
And Ajay, good morning. Well, I think from the price point of view in the stock market, I think the stock has been a rank underperformer in the last so many years. And of late, I think once the government systematically ensured the higher amount of production from Coal India and supply to power plant, then after I think the progress of the company as far as I think the working is concerned has remained by and large steady. And that gives a slightly better hope than what it used to be earlier, wherein the performance would remain quite erratic. Given the situation that I think the performance could remain sustainable going forward, I think re-rating definitely was asked for, and market has actually I think done good amount of re-rating for the stock. In my viewpoint, I think the commodity stocks we don't expect I think too big an improvement into the rating, but 6-7 times ratio I think could possibly expand to 8-9 times. I think that is distinctly possible. So to a greater extent, I think one could possibly wait for relatively better price than what it is currently, and wouldn't call it as a fully priced at this point of time. There is a headroom left, I think, for sure, as far as I think the stock price is concerned, given the strong backing of the fundamentals now that this company is achieving.
Okay. Deven, hi, good morning, and thanks a lot for joining in. The Tata Tech IPO opens today, so I wanted your thoughts on whether you would subscribe to it, and also what do you do with some of its peers, right? KPIT Technology, Tata Elxsi. Your thoughts on this entire sector?
Yes, Sonia, good morning. Well, I think the entire engineering R&D space remains quite favorably positioned, and different companies have different models to follow, including the LTTS, LTIM, who are having, I think, some business on this front as well, and at the same time, Tata Elxsi, Cyient Technology, and likes of KPIT. The Tata Technologies, I think, distinct advantage, as I see, is an end-to-end supplier of the entire engineering services to the OEMs. And that is where probably I think this company is really positioned more better and focused at this point of time. I believe that I think this situation is going to give them more amount of I think visibility on the new contract, particularly because of the generation of vehicles are changing. Up till now, we have seen electric vehicles I think coming in, replacing the ICE engines, and I think more or less in the same chassis I think this vehicle would come 2025, and most of the OEMs are expected to bring up the vehicle chassis and the entire body, which is meant exclusively for the electric vehicles. And that is where I think the new generation of EVs are going to create better amount of business prospects for companies like Tata Technologies. And at the same time, I think the vertical focus on the aviation space also demands, I think, a good look as far as I think the business outlook is concerned. So given the possibility and given the valuation at which this company is coming up into the market with IPO, which is far more inexpensive, as I would call it, as compared to the peers, definitely it demands to subscribe into the portfolio and buy, I think, once it gets listed further.
Yes, you were talking about the aerospace and transportation space, right? I mean, 30% of Tata Technologies business comes from aerospace and transportation, apart from autos. So that's also a big space to focus on. Since we're talking about aviation, Deven, what about Indigo? Third day running now, domestic traffic has been at a record high. Despite the 15% rally we've seen in the past 6 months, would you still buy the stock?
One should hold on to the stock, definitely, for sure, because I think on one side, the aviation fuel prices are remaining under control, and that's a good news, because that is where probably I think this company has probably seen relatively better amount of I think stability on the operating side. At the same time, the contribution coming from food and beverage is part of selling in flight. I think that is also increasing, and that is contributing sizably to the performance on the revenue, the profit side. More importantly, given the kind of the traffic that they are experiencing at this point of time, I believe that I think this company is heading for better times. More aircrafts, more airports, and I think higher amount of traffic along with the operating matrix that we are talking about, all of them put together is a recipe for better tomorrow for company. And that's where I believe that I think one can possibly hold on to the company and buy during the dips, even though the stock price has corrected somewhat. I would think that I think one should buy during the dips into the portfolio.